Hey, Bay Area friends. Steve Moon here, your San Jose real estate expert. Today, we're going to dive into what's really happening in the Bay Area's local market. And let me tell you, it's been a head scratching type of a thing happening lately. You might have noticed it yourself. Homes are sitting on the market a little longer, but prices, they're holding. They're not dropping, not crashing, and just kind of holding steady. I like to call this the weird market. Yeah, that's a technical term for it. But don't worry, we're going to break it all down, and I'll promise you that you'll walk away with a much clearer picture of what's happening and how to make some smart moves based on what you learn. So let's start with the big question. Why aren't prices falling like so many people had anticipated and expected? The main reason is homeowner equity. Across the US, more than 20% of homeowners own their homes outright, no mortgage. And many others have significant equity, sometimes 30, all the way up to 50% or even more. So this could easily mean that we have in excess of 60 to 70% of homeowners who are equity rich. And what does that mean for the market? Simple. Sellers have power. If a homeowner doesn't like the offer that they're getting, then all they have to do is just wait until the rates drop. They don't need to sell at a lower price, not necessarily. There aren't any pressures. That's a huge reason prices aren't crashing, even if the number of sales is slowing down. Think about it in this way. Imagine a seller sitting on hundreds of thousands of dollars in equity. They're not desperate. They can pick and choose. And when enough people in a market are in that position, it creates a kind of a floor for prices. And this is especially true here in the Bay Area, where we saw an eye-watering equity growth in the past 5 years. Now let's talk about buyers, because this is where it gets interesting. Investors are playing a major role in California housing market. Right now, more than 1 in 3 homes statewide are being purchased by investors. And it's not all hedge funds, the kind of people picture when they think about corporate investors. A lot of these are small-time investors, maybe your wealthy neighbor with a few rental properties buying strategically. These investors actually help stabilize the marketplace. Even when typical buyers step back because of rate or affordability issues, investors are ready to jump in and keep the demand steady. And we're seeing more of this type of activity. And then there's the foreign money. Overseas buyers have returned in a big way, especially here in California. We're talking about cash buyers scooping up multiple prime properties, like those 9 burnt out lots in Malibu that went quietly but also quickly. And why now? A weak US dollar means that American real estate is cheaper for foreign buyers. Higher mortgage rates in the US discourage domestic buyers, opening an opportunity for foreign investors. Tariffs and economic issues in other countries are pushing investors to hedge in US real estate. And the net effect? International cash is filling in the gap, keeping demand strong. And yes, China is back in the California market with a fury alongside buyers from Canada, Mexico, and the EU. This is especially true here in the Bay Area, and we're seeing it. Now, here's the part I'm most excited about. There's finally a shift that benefits local buyers. Mortgage rates have just this week dropped to their lowest point in nearly a year. Now it's around 6.35 for a 30-year fixed and mid-5s for a 15-year. That's huge. Lower rates mean lower monthly payments, more affordability, and more buyers re-entering the market. We're already seeing a 10% jump in applications in just 1 week. And in many areas, there are actually more homes for sale than buyers. That's a rare and welcome change in today's market. And if the Fed follows through with rate cuts as expected, this trend will continue. Once rates dip below 6%, expect pent-up demand to surge. That's a psychological barrier that's going to break very soon. Buyers who were sitting on the sidelines are finally going to be able to act. And that creates an opportunity that didn't exist just even a month ago. So what does this all mean here in the Bay Area? Even though California recently saw a $106 billion drop in total housing value, don't let that fool you. San Francisco and San Jose remain strong among the top $10 trillion housing markets in the US. Our market is strong, resilient, and it's very innovative. San Jose in particular is leading with new initiatives. So for example, it's now possible to sell in San Jose ADUs or granny units separately as condos. That opens up a whole new segment of homes to buyers, increasing flexibility, and also could help ease affordability pressures. Other cities like Berkeley, Santa Cruz, and San Francisco are likely to follow suit. On top of that, the Bay Area continues to attract high-paying jobs, especially in AI and tech. Some top researchers are landing gigantic pay packages, sometimes over $250 million in company stock. But don't forget all the lower level employees who are also getting eye-watering compensation packages. That means strong local demand will likely continue to support prices. So what should you do if you're a buyer sitting and waiting? Don't wait for the market to crash. With so much homeowner equity and steady investor demand, a big drop is highly unlikely. Leverage the lower rates. Even a small dip can make a big difference in monthly payments. So get pre-approved, understand your budget, and be ready to move. Explore new options. More inventory and innovations like ADU condoization means more opportunities. The bottom line is that the market is opening doors for you, but you need to be ready to step through and do that quickly. When the market shifts, it happens incredibly fast. And if you're a seller, here's what I'd recommend that you do. Know your power. Equity gives you control. You don't have to sell unless the offer makes sense for you. Price smartly. While prices are holding, more inventory also means buyers can be more selective. So price competitively to attract serious buyers. Even rich people like deals. Highlight key features. Single-story homes are a goldmine for older buyers who are downsizing, so make that a selling point. Consider ADU potentials. If your property has an ADU or a spot for ADU, remember it could now be sold separately, adding value and broadening your buyer pool. The Bay Area market is complex and a weird mix of local dynamics and global cash. But here's the takeaway. It's full of opportunity. Lower rates, more inventory, innovating housing options, and steady demand all create a bright outlook for buyers and sellers alike. Understanding these trends gives you confidence to act smart, whether you're buying or selling, or just simply keeping an eye on the marketplace. If this video helped you, share it with someone who may benefit from it, and don't forget to like and subscribe for more updates on the Bay Area housing market. So big changes are coming, and I'll be here to help you navigate through them. So thanks for watching, and I'll see you in the next video.